All right, let's dive in. Today, we're pulling back the curtain on Block, the company behind both Square and Cash App. We're going to break down their game plan for the next few years, all based on what they just told their investors. So let's get into it. So, what's the big question on everyone's mind? It's this. How does a company that's already this huge plan to get even bigger and, more importantly, more profitable by 2026? That is the core challenge they've set for themselves, and we're about to walk through their answer. Okay, so before we get into the how, we got to talk about the what. What's the destination they're trying to reach? What is the specific financial target they've put a stake in the ground for? And boom, there's the number, 15%. The company is guiding for a 15% gross profit growth rate every single year all the way through 2026. I mean, that's their North Star for this whole strategy. It's a really ambitious number, so you have to wonder, how did they even come up with that? So how in the world do they land on that 15%? Is it just wishful thinking? Well, not exactly. They have a pretty methodical three-step process. First, they just look at their current business and project it forward. Pretty standard. Then they start layering on the potential impact of all their new ideas and products. But here's the key part. They actually assign a probability of success to each one. That way, they're not just hoping for the best, they're creating a much more realistic data-driven forecast. All right, so they have this big 15% growth target. Now, you might think the first step is some flashy new product launch, right? Nope. The first part of their plan is actually about rewiring the entire company from the inside out. They're doing this thing they call functionalizing the company. Now, that sounds like a bunch of corporate jargon, but it's actually a pretty simple idea. Instead of having one engineering team for Square and a totally separate one for Cash App, they're creating one giant engineering organization for the whole company. The goal? To move faster, stop duplicating work, and get their absolute best people working on the most important projects, no matter what part of the business it's for. And if you want to know what their absolute core focus is, this quote says it all. Their number one priority isn't just to sell AI to customers, it's to use AI to automate the internal gears of the company itself. It's a huge shift in thinking. And the payoff for this laser focus on automation, it's huge. They believe this is how they hit that 15% growth without a massive hiring spree. It's about letting their current employees achieve way more. And what's really fascinating is that this focus unlocks totally new ideas, like a money bot or a manager bot, AI tools that could help their customers automate their own businesses. It's a pretty cool feedback loop. Okay, so the inside of the company is getting this major efficiency upgrade. But how does that translate to actual growth on the outside? Well, that brings us to the next piece of the puzzle, building a way smarter sales force for the Square side of the business. To really get what they're trying to do, you have to see the problem they're facing. Right now, as this chart shows, their sales reps are spending about half their time on boring administrative work, and only the other half, actually selling. And hey, don't just take my word for it. This is a direct admission. An executive came right out and said that about half of their sales team's time is just lost to admin tasks. Think about that. That's a massive, massive opportunity for improvement. So, what's the plan? You guessed it. They're throwing that same automation strategy right at this problem. They literally have engineering teams whose only job is to build tools that slash that admin time and give those precious hours back to the sales reps so they can do what they do best, sell. And because each rep becomes so much more efficient, it gives them the confidence to really expand the team. Their target is to grow that sales force to 300 reps by the end of 2027. And they can do it knowing that every single new hire will be way more productive from day one. All right, so that's the game plan for the Square side of the house. But what about their other giant? Let's switch gears and talk about the strategy for reigniting growth for their massive consumer app, Cash App. Okay, and this is where things get really interesting. Officially, the company's telling Wall Street to expect low single-digit growth for active Cash App users. And on the surface, that sounds kind of meh, right? Almost like it's slowing down. But then, right after saying that, an executive basically gets up and says this. They make it super clear. Please, whatever you do, do not read that number as our actual target. He says their internal goal, what the team is actually working towards, is to meaningfully beat that number. It's a classic case of setting expectations low publicly while aiming way, way higher internally. So how are they planning to blow past their own public numbers? Well, they've got a few key levers they're ready to pull. They're doubling down on network effects, just making it dead simple to connect with your friends. They're going after teens and families with this cool idea of multiplayer money.
And they're finally connecting their two ecosystems, seeing every Square terminal out there as a chance to grow Cash App. Plus, of course, they're rolling out new features to keep people hooked. Okay, let's take a step back. We've talked financials, the automation engine, the sales strategy, and the Cash App plan. Now let's tie it all together and see what the big picture really looks like.
This table really nails the tale of two strategies here. On one side, you have Square. For them, it's all about going upmarket, getting bigger businesses, and expanding around the world. And their focus is on growing the total number of profit dollars. Then you have Cash App. It's a completely different game. It's all about user growth and engagement, getting more people to use it more often. The goal there is to drive up the profit they make per user. Two very different businesses with two perfectly tailored strategies. And this right here might be the single most important takeaway about their whole financial philosophy. It's not about the margin percentage. They said over and over again, they are way more focused on growing the total pile of profit dollars. They're totally willing to take a lower margin on a deal if it brings in a much bigger chunk of total profit to the company's bottom line. So there you have it. That's Block's blueprint for 2026. It's a massive bet on themselves, a bet that by automating their own company, they can outmaneuver and outgrow everyone else. The final question is this: will this intense internal focus on AI and efficiency actually work, or will it be a distraction? The answer is going to shape not just Block's future, but maybe the future of how we all use money.